The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Ardor SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. I have a very special guest for you today that's really going to share some things that we don't normally get to hear, which I'm really excited about. Mariusz, and if I butcher this, Skonieczny?
Not bad.
Is that okay? Close enough?
Yeah.
Yeah, Mariusz is a professional investor and the founder of Classic Value Investors, Microcap Explosions, and the creator of Value Investing University. He graduated from Indiana University in 2003 with a finance degree, and from 2003 to 2008, he was a residential and commercial real estate broker. During the 2008 and 2009 crisis, which we all seemed to make shifts and had to make major decisions, he made a courageous decision on his own to go ahead and start Classic Value Investing. Welcome to the show, Mariusz.
Thank you very much for having me.
Yeah, how are you today?
Oh, very good. Very good. I'm excited to talk to you about investing, real estate, everything.
Yeah, I am too. So, we kind of led to how you got started. Obviously, in 2008, 2009, myself included, made decisions to, pivot one way or the other. Give me a little bit of background on that for you. Well, how you came out from being in real estate to going to investing.
Well, as you said, I graduated university in 2003, and I was always interested in investing and money. But at that time, that's when the Poor Dad, Rich Dad books came out.
Yes. Mm-hmm.
And so it kind of caught my attention on the real estate side. And since I didn't have any money, I figured, become a real estate appraiser, learn how to value real estate. So that's kind of how, it pushed me into that field. So I was a real estate appraiser on the residential side. Then I did some commercial work. And then briefly, I did the brokerage on the commercial side. And then when the crisis hit, I was already, when I was in real estate, I was already like reading Warren Buffett,
right.
Value investing. And I just had more interest learning about various different businesses, where real estate is just one type of business. And when the crisis hit, my personality just suited everybody's running towards the exits, everybody's panicking. Yeah. That's when I go in and scoop up deals, and that's it was just a right transition for me.
Perfect. So, you mentioned, that the investment industry is set up for mediocre returns. That's one of the reasons you do things in the microcap side. Tell me about that a little bit and why you believe that.
Well, first of all, let me just address one more thing, like why I thought that being in the stock market, specifically in the small cap space, was more beneficial than being in real estate. You see, in real estate, when you are buying properties, you're buying them from real owners most of the time. And real owners are not going to sell you something for 10 cents on a dollar. They're just not that dumb. Like they know what they own. They know what the properties next door sell for. It's really difficult to get a really, really good deal. I mean, you can get good deals, but something is wrong with the property. You have to put a lot of work into it, which is fine. But the point is that you are buying from a real owner. When you are buying in the stock market or in the microcap space, you're not buying from a real owner. You're buying from some investor who doesn't treat stocks as businesses, or a hedge fund manager who looks at charts and reads CNBC all day long and gets freaked out when interest rates go up, or will sell you something, even if it's cheap, just because it might get cheaper the next day. You can't get that in the private world, really. I mean, think about go to a local gas station or local Jimmy John and tell them, you know what, the Fed just raised interest rates. Can I buy your business for 10 cents on a dollar? You know, he'll laugh at your face and show you the door. They're just not that stupid. And in the stock market, they are that stupid. And that's why I'm there, because of that. And then you have another layer of why are you attracted to the microcap space? Because I have very little competition in that space. The investment industry is structured in a way where it's all about assets under management. They gather assets under management. It's not about delivering great returns. It's about babysitting your money, just giving you enough return so they can chip off whatever little fee that they have. That's what it's about. So if you are going for investing billions of dollars, you have to go after the big names, because you have thousands of clients or all this money behind you. You can't play around with small $10 to $20 million companies, because you would need thousands of them to fill up your portfolio. So you go after the big names. You go after the most prestigious exchanges, New York Stock Exchange, NASDAQ. You go after the Microsoft, Apple, the Teslas, everything that has a lot of liquidity and it's big. So most of the professional money is there. And then, so institutions are not playing in that small or microcap space. And then what about retail? Well, retail, oh my God, retail. Don't even get me started. I mean, what have they been chasing over the last 3 years? Anything worthless, crypto, AMC, GameStop. I mean, they're chasing everything that's shining. They have no idea what they're doing. I mean, if you put your money in crypto, most of the cryptos are completely worthless, and they call it investment. That's where they are, right? So institutions are out. Retail is chasing the worthless crypto. And so there's very little competition, and most people don't even know that the microcap space exists. They don't even know that there's exchanges that cater to those smaller companies. 99% of them don't even know these exchanges exist. So I can go into these exchanges, roll up my sleeves, find good opportunities, find good companies, and at some point they might become big enough that they do graduate to like NASDAQ or New York Stock Exchange. Then they get repriced. And I'm not saying it's easy, but like, because of that competition, it's a lot. The efforts that I put into researching and studying my companies let me go a lot further than the efforts that if I put the same amount of effort into studying Tesla or Apple, like, who cares? Like, everybody knows about these companies. There's hundreds of analysts covering them, and my efforts don't give me any alpha.
Gotcha. So where do you find these companies? I mean, are these pink sheets? Are these you just going out and you have people, assisting you? Or are you just going through and finding them yourself? Or how does that due diligence work?
Well, in the US, the traditional path of going for companies to go public is they stay private, they get venture capital money, and then at some point they go straight to NASDAQ or New York Stock Exchange. That's the traditional route. Right. Now there's an alternative route where some founders or some owners of businesses want to give their investors liquidity earlier, and then they might not take that traditional route, and they might list it on. We don't have venture exchanges in the US, but in Canada, they have what's called Toronto Stock Exchange Venture, or they have a Canadian stock exchange, or, like you said, pink sheets, which is OTC, over the counter market. It's not an exchange, it's a quotation system, but it serves as an exchange. So those founders or those businesses can list them on these exchanges. I mean, many companies on the Canadian Stock Exchange, they're not Canadian. It's just that there's nothing equivalent in the US, so they go there. And so you can go and find those companies there. Canadian Stock Exchange only has like 800 companies listed. You can go through every single one. TSX Venture, maybe 2,000 or 3,000. And it might sound like, oh, you need to go through 4,000 companies. Well, not really, because 80 to 90% of them are trash. Like, they don't have any revenues, they don't have any business, they have a lot of promises, and they're looking for gold. I always say, investors on these exchanges, they get high on pot and they're looking for gold. I mean, they're interested in these trash companies,
Right.
Cannabis was hot, now it's not anymore. Then they're looking for companies that have all these big promises, cure for cancer, no revenues, but they have cure for cancer. I mean, they're easy to eliminate. It's like you don't have any business. So 80 to 90% of them is just like trash. I'm not looking at it. You're looking for gold? Thank you very much. So I'm looking for real businesses that have real solutions, real technologies, real clients. And so it's maybe out of those 4,000, maybe 400 of them are real. And then from that, you narrow it down to the ones that you like.
Nice. Okay. So we used to have this, there's something called the odd lot theory. The odd lot theory is a small investor, guys like me, are always wrong. And you actually mentioned, most people are unsuccessful in investing. Why is that? Why does the odd lot theory seem to be consistent that most people are generally wrong?
Well, okay. I mean, because most people want confirmation from others. They can't think independently. They need somebody else to tell them what to buy. And if we take it into the real estate world, and you have you're buying a house, do you want 100 people bidding on the house with you, or do you want to be the only one at the table?
Right.
Like, it's obvious. Like, and so why do they need to have all this confirmation from Jim Cramer and everybody else? Oh yeah, this is okay to buy now. The economy is just at the right place. You can feel comfortable. You can buy now. Well, if everybody thinks it's the right time to buy, the price is probably not the greatest.
Right. That is the confirmation. The confirmation to them, or to most, I think, retail buyers or investors, is the price, right?
Yeah.
Yeah.
I mean, think about this. So many people thought it was a great idea to buy worthless crypto. I mean, think about this. Buy worthless crypto to protect yourself against inflation. How crazy is that? You buy something worthless.
Right.
You exchange something that still has value, right? Because currency still buys you something, but it loses value, purchasing power over time. So you exchange something that still has value so that you can buy something worthless, so that you can protect yourself against inflation. I mean, this is just the craziest thing I've ever heard in my life. Yeah. And then everybody is like on board with it. Because they hear it enough on YouTube, the crypto is the next thing, and this and that. Like it's just unbelievable. Like if you convince majority of the population that crypto is great, then I mean, I guess you can tell them that Santa Claus exists.
Right. Well, we might have some kids listening. No, I'm just kidding. Yeah, it reminds me, and I don't know your age, but my age, I was around I started investing in the early 90s on the retail side, and it reminds me of Japan. Like the Nikkei was going nuts during the 90s, and then all of a sudden, boom, nothing was really real. It took them 9 years to get out of a hole, economically speaking. And it just seemed like it was mob rules on the exchanges, and it's like you said, they needed that clarification or that belief, and that belief always came in the way of swing trading, and you actually mentioned, I think, why trading is not investing, I mean, and that's what we've seen with the cryptos. You mentioned, I think you were mentioning some of the retailers like GameStop and all these things recently that just kind of hit a ceiling and are now falling back to earth. Is that, would you agree with that's kind of what's been going on with a lot of swing trading?
Well, I mean, the whole notion of, trading versus investing, like so many times I'll say to people, just in general public, I'm investing, and they think, oh, so you're day trading. Well, no, I mean, I don't trade. Like sometimes months will go without me making any trade. I make a trade to get into a position so that I can be an owner of whatever. Like when I own a stock, I own a partial interest in a business.
Mm-hmm.
Like, but trading, you see, the reason why most people don't make money in trading, like statistics are like 90 to 95% of them don't make money in trading, is because you're not adding any value. Like, what makes you think if you buy something at 10 a.m. that you should be able to sell it for more at 2 p.m.? Like, did the business change?
Right.
Within that time, you're not adding any value. It's like buying an orange and reselling the orange 5 minutes later. Like, okay, if you're a convenience store, you can do that because you're adding value. You might be getting your orange from a producer and you deliver it to someone at a busy intersection, right? You're adding value. Yeah. You're adding access. But just buying something and resell, you're not adding any value. That's why it's so difficult. But if you hold businesses for a long time, and I'm talking years, that business can change over time. It can add more clients. It can introduce new products. It can become more profitable. Then you have a reason to resell something later on because a value has been added. Investing, right, you make money over time. And yeah, in short periods of time, the Fed does something stupid here and there. Yeah, you lose money and people lose their mind because, we're going into recession and you're down on your portfolio. But if you are right on your investments, if you bought McDonald's in the, 20 years ago, I don't care what happens in the world. Your stock is much higher. Why? Because McDonald's sells more hamburgers. And that's it. It's that simple.
Perfect. You have authored, if I'm not mistaken, 11 books. Is that correct?
Yeah, that's correct.
Yeah. And if we want to, I guess the easier way, you have a website where members can actually go on and kind of learn from you, right?
Yeah. So I have 11 books, right?
Right.
And, you can take my impossible to pronounce name and put it into Amazon and you'll find them. Then
it's easier to copy and paste.
Yeah, exactly. Then I have a YouTube channel, which you just take the same impossible to pronounce name and you put it into YouTube and you find my YouTube channel. And, I talk about some investment ideas there for free. And then I do have a paid service, which is microcapexplosions.com, where, I talk about some other companies that are not publicly available. I mean, they're public companies, but I don't reveal them in the public YouTube channel.
Right. So it's just only available to the members on your website.
Yes.
Perfect. So where do you see, your company, what you do, the website, your business, where do you see that over the next year or two? And how do you plan on getting there?
Well, right now it's tough, right? Because, all you hear in the news is interest rates going up and recession. Everybody is so focused on that. So you have people on strike. They don't want to buy anything.
Right.
Even though it's probably a good time to buy everything, just like it was in 2008, just like it was in 2020.
Right.
But now they're on strike. They want the clouds to clear. Well, okay, when they do, the price is also going to clear. So my business is very much tied to the stock market. When people feel good, more people subscribe to my website. Right. When people don't feel good, more people drop out. So it's just the way it is. But that business is going to do very well because I think over the next 2 to 3 years, the stock market is going to do well. Why? Because it's so horrible right now. Yeah. The cure for a bear market is a bear market.
Right.
The cure for a bull market is a bull market. I mean, if you think about from 2008, a new generation of investors or traders mm-hmm. have been accustomed that everything goes up all the time.
Right.
And then you had the birth of people like Cathy Wood, where any trash you buy goes up. And,
Right.
then you go on CNBC and you talk about all the trash that you have. And so they had a party from, from 2008 to 2021. I mean, there was a little bit of a sell-off, but then, somebody brought cocaine and into the party in 2000, gave them steamy checks, and then they went absolutely crazy. Bought everything from, growth stocks, AMCs to worthless crypto. And now you and I are paying the price for their stupidity. Really.
Right.
That's what's going on. So now, unfortunately, we have to go through a detox. Those people have to lose a lot of money. We are losing a lot of money because of them, but it's absolutely needed. It's absolutely needed because they need to learn their lesson that, when you buy things, you should think about what's underneath, not just the price, not just technicals, and not just, what you hear on YouTube or read in the articles. Like, there's real value behind the things you buy. And if there's nothing like crypto, well, guess what? It's going to go to nothing.
Yeah, we have a place for people who want to do that. In Florida, we call them casinos. So, it's like, if you want to do that, there's a place and a time, and, or you can just buy options, whatever, but swinging in and out of things, just like you said, the orange analogy, selling an orange, the analogy was perfect. There's no value to that orange. There's no value to that stock in 15 minutes or that investment in 15 minutes that it didn't have 15 minutes before you bought it.
But you know what? It's not just retail investors that do dumb things.
Yeah.
Professional investors. I mean, retail investors don't have the monopoly on stupidity. Like, professional investors are just quite as capable of being dumb as the retail people. And why? Because the hardest thing, if you think about the people with money, okay, if you have money, most likely you made it because you hustled, you had some kind of business, I don't know, you flipped some real estate, like you did something fundamental and you made money. And then because you did that makes you smart, and you think you can do the same in investing. And investing is a completely different skill set, because in investing, the greatest skill you can have is sit on your ass and do nothing, because you're investing in somebody else's business. Somebody else's is doing all the work. And now what you have to do is sit on your ass and do nothing. And that's really hard for people to do when all their life is they hustled. Okay. But that's why, they trade and move in and out of positions all the time. They cannot even fathom to hold a position for a few years. And even if they themselves could do it, you think their clients would let them do it? No, they're reading CNBC every day, and they're worried about inflation, and oh my God, interest rates are going up. Therefore, we shouldn't own anything. If we go back to 2020, I like to use that analogy. What were the hottest companies and hottest stocks? Well, Netflix, Amazon, and Zoom, right? Right. So the message back then was this: buy Amazon because everybody's going to be staying home and ordering online. Buy a Zoom because everybody is going to be staying at home and not going and flying, blah, blah, blah. Buy Netflix because everybody's going to be staying at home and signing up for Netflix. 2 weeks later, buy Netflix because everybody's going to be staying home and signing up for Netflix. 2 weeks later, buy Netflix. And it's like, okay, I heard that freaking message already. I heard it so many times. Just because people are going to be staying at home and signing up for Netflix does not make Netflix unlimited, right? It does not make it worth anything you want. But they didn't care. They just kept buying and buying. The valuation didn't matter. So it was kind of like if you're trying to buy a house for $100,000 and the seller says, oh, okay, we can agree $100,000, but you know what? There's a pool in the back. Oh, okay, I didn't know there's a pool in the back. I'll pay you 110. 5 minutes later, the seller says, but there's a pool in the back. Okay, thank you. 5 minutes later, there's a pool in the back. At some point, you're like, okay, do you want me to pay you $1 million for that freaking house because you said there's a pool in the back 50 times? It doesn't work like that, right? It's already priced in. So that's what it was in 2020. What is it now? Interest rates are going up. The recession's on the horizon. Therefore, don't buy anything because the recession is coming. Don't buy stocks because the Fed is going to raise interest rates. It's like, okay, how many? You know how many articles I've read about recession coming? Like I wish we're in recession, because it's more painful to read these stupid articles about recession and interest rates going up. It's like it makes it so much worse. I love it. So it's like, don't buy anything because we're in a recession. Like, just because we're in a recession, just because interest rates are going up, does not mean that all the companies and all the stocks are worthless. Okay. But that's the complete opposite of where we are right now. So in 2020, it was not a good idea to be buying Amazon and Netflix and Zoom, because all of these stocks got absolutely butchered, because it was not a good idea. Today, it's not a good idea not to be a buyer for the same reason. Like I'm buying everything I can. Why? Because today, what I buy today is probably worth 10 to 20 times down the road. Because people are so freaking crazy and stupid that they're selling me things for 10 cents, 5 cents on the dollar, just because the next day it might be 4 cents on a dollar. Okay, that's fine. I'm going to buy everything off of you because I know how this movie ends. I've been in this movie so many times. I know how it ended in 2008, 2009, even though all the articles and everybody was screaming the world was going to end. 2020, everybody thought that we were all going to die and never going to stop wearing masks. Like it all ended. This is also going to end, and people who have the courage to buy whatever it is today are going to make a killing down the road.
Yeah, for sure. It's interesting because I've been saying the same thing. What I love is the contrarian points of view, that it's never the same on both sides, right? Oh, this isn't like 2008, and this isn't like 1999 or 1992. This isn't like, it could be definitely something different, but the bottom line is some things just don't change, right? People's reactions don't change. That's what doesn't change. People, like you said, there's no, nobody has the license on stupidity, just because they're not an institutional investor. And I think the media and Wall Street and the banks especially need people to react in order for them to profit. I mean, I think that's what it boils down to, not to get into too much.
Look, it's exciting. It's exciting to talk about recession, right? I mean, if you look at, I have a YouTube channel, right? And I look at some other popular YouTubers. If you look at their YouTube, I mean, every thumbnail is like, oh my God, this is crashing. Like, okay, it's great. It's fantastic. It generates views, Like, but that's not, you pay a very high price for a cheery consensus. Okay. That's it. And I am in the business of buying businesses or buying assets. And now, again, if I'm buying a house, do I want 100 people bidding against me, or do I want being the only one at the table? I am the only one at the table right now. For businesses, everybody is on strike. I like that because I can get a good deal. And every little money that I can put aside every month, every week, I'm putting into these things. People are on strike. Fine with me. I'm accumulating.
Right. That's kind of the Warren Buffett approach as well, right?
Yeah. And I mean, I left the real estate industry in 2008, 2009 in an environment like this. So my personality is suited for an environment like this. You think I'm going to panic with everybody else panicking right now? No, I'm going to keep loading up.
Right. Nice. Very nice. Mariusz, how can someone get in touch with you if they want to get involved with you? Obviously, you've got the YouTube channels, you've got the books. Is it the website the best spot, or?
I would say start with YouTube. Just kind of listen to me on YouTube, and then over time, hopefully, you'll get more warmed up to me. Nice. But I want, like, anybody who ends up subscribing to my paid service or whatever, I want people that have a brain to subscribe to it. I've had enough people with no brain, so like I would like to attract people with a brain instead of lack of brain.
You heard it here, everybody. If you don't have a brain, don't bother. So let me give you the last word. I always give someone the last word, and kind of anything that you want to cover or anything that we didn't cover or you want to say, have at it, and then we'll sign off.
Oh, just okay. Last word. I always say, learn how to think independently.
That's what you're all about, right? Mm-hmm. I mean, ultimately, that's what you're all about, and I think that's why you have, you're not the, what is it they call it, the canary in the coal mine, where you're gonna, or Chicken Little. might be a better analogy. The sky is falling and running around with your head cut off. It's been great having you on the show, Mariusz, and I look forward to talking to you again and kind of catch up with you and see where things at later on.
All right. Thanks for having me. Thank you.
You have a great day.
Bye.